Mr. Anil Gupta joining us. He's CMD at KEI Industries. Mr. Gupta, very good morning and thank you for your time here at NDTV Profit. We truly appreciate it. Let's talk a bit about your quarter. Inline revenues, I think margin miss and what's happening with EPC is what is a bit of concern. So let's get to that straight away.
Thank you very much. First of all, I talk about EPC. EPC business, we have for last 3 years back, we have given a guidance that we are gradually reducing this business because of longer working capital, and hence in line with that guidance, we are gradually reducing the business, and even our export, where we did 150 crore of EPC exports last year for our Gambia project. This year, that revenue is nearing negligible, maybe in 0 or 10, 15 crore range. So actually in exports, we have grown in wires and cables by more than 20%. But due to EPC decline, the number is looking, less. So far as our margins are concerned, margins are, 0.5% down, mainly because of, lot of volatility in the commodity prices like copper and aluminium, and also the volatility in the forex like dollar, which affects all the commodities.
No, so just a couple of follow-ups there. Of course, your engineering, procurement and construction, that is your EPC segment. You said you want to reduce dependence on it, but it has come down quite sharply, nearly 60% this time round. It's also a higher margin segment. So I just want to understand, Mr. Gupta, is this drop that we've seen part of the plan or because of the circumstances? If you're getting what I'm saying, is this because the business has not come in, or you were aiming for this kind of a drop this quarter?
No, it is planned. We are aiming for, reduction. We have not taken new projects. We have not bidded for new projects. That is the reason it has come down. So it is a planned activity.
Important clarification. This is a planned activity as far as EPC is concerned. Let me then understand, do you see the pain from commodity cycle as well as dollar fluctuation, etc., now easing out?
See, nobody knows about the commodity. Nobody can predict the commodity prices or, exchange rates. So we have to live with it. But you can see that our margins are very marginally impacted due to these fluctuations, and we have maintained our, commodity procurement and commodity stocks. Vis-a-vis our orders very efficiently. So I think whatever is the degrowth of 0.5% in margins, we should be able to make it up in the full year.
Mr. Gupta, this is Hiral on this side. You mentioned about EPC completely being a planned activity. By which quarter will EPC be out of the PNL? That's number one. And two, will the CNW and the other aspects be able to take over the loss in terms of revenue that you will see out of this segment?
Our EPC revenues are hardly 400 crore, which is just 5% of our turnover. Secondly, we do not plan to completely exit. We will continue to maintain at 400 to 500 crores of business in EPC segment. And we are just taking one project maximum in a year to maintain our presence in this business. Although our focus is not there. So far as its impact on our total revenues are concerned, it will not be there because we are steadily increasing our wire and cable volumes and wire and cable businesses and capacities. So we will see a growth in our overall turnover in the coming quarters and the years.
When you mentioned about cables and wires as well, your revenues have seen a growth of around 26% on year-on-year, and sequentially it's a 10% growth. What has been the volume growth in this quarter for cables and wires?
Volume growth is approximately 17% in this quarter.
And what will your overall guidance be in terms of volume growth for the fourth quarter of FY25 as well?
our overall full year growth in volumes should be around 16 to 17%, which was initially guided in the beginning of the year. And value growth will depend on the pricing.
This is FY26 and what will 26 and 27 look like then?
FY26 will be around in the same, but FY27 should see more than 20% volume growth, year after year, because by that time our new capacity will come up in production, and that will give us more leeway for improving our sales.
My last question coming to you is with regards to exports. Your CNW, that's cables and wires exports, have seen a growth of 31%, which is around 10% of your revenues currently. Was 10% in the third quarter of FY24 as well. How much do you think will that increase from here on, and will that be margin accretive?
It will definitely be margin accretive, and we should see a growth in export of wires and cables by around 30 to 35% from the last financial year. But as soon as our new capacities come up on board, this volume of exports will grow substantially, because we have developed a lot of new markets for our export products.
Okay, so exports will be a business that we will be watching out for pretty closely, and how margin accretive will be. But interesting is going to be the volume growth that we are expected to see in the coming quarter and in FY26 and 27. Thank you, Mr. Gupta, so much for joining us on the show and sharing the views. So that's the management of KEI Industries.